Hey everyone, welcome back. First of all, happy Father's Day to all the dads out there. You guys are rock stars. Wishing everyone who's watching this video a very happy, healthy, and of course, full of celebrations, full of laughter Father's Day. I got my Father's Day gift. If you can see it here, this is my son's sticker for the Father's Day. He came in the morning. He's like, "Dad, you have to put this on all day. You're a Spider-Man." I will take it. I was like, if it stays for a month, I'll put it for a month. So now I thought I will change the tune here. So last video that I released about my selling the stock, I received some very, I would say, nice comments. I won't call them any kind of bad things for people. Those who didn't even give nice comments, it's all good because we all have our opinions. I had my opinion, which I shared with everyone, and you guys have your opinion that you shared with me. So I appreciate each and every comment that you gave me. Some people unsubscribed. I lost some subscribers, which is fine because again, if you don't agree with my view, why would you be subscribed? I will also do the same thing. So there is no hard feelings whatsoever. I have so much more people, those who loved the video. That's what matters to me. And so the reason why I made that video is number one, when conditions like this market condition happens in the market, what we are going through right now, this is, I'm pretty sure most of you will agree with me, this is once in a lifetime, once in a generation opportunity to build your wealth. And we don't have unlimited money. I wish if I had, $10 million sitting on the sideline that I can put in the market right now, I would in a heartbeat. We don't have that. So for me, to sell my positions was to raise cash so that I can buy the names which I trust in and believe in. The other names that I had, I didn't buy them because I was gambling or because I had no clue. No. I bought them because I believed in those companies, and I still do. I still believe in Palantir. I still believe in Neo. I still believe these companies will be fine in the long run. But because I have limited capital, I need to put my capital for a better use. I need to put my capital for a place where I will see higher gains. And I have many different accounts. I have an account on Webull that holds Neo, Palantir, Tesla, few shares. I didn't touch that account. That account is like small account. I don't pay attention to that. By the way, the link for the free stocks is in the description, so take advantage of that. Then I have an account with Robinhood that I opened because they were giving some free shares, and I said free shares is amazing. I have few Neo, I have some Shopify there, I have some other names which I didn't even touch. Because those accounts don't matter in my overall portfolio. That money that I see, it doesn't matter. I keep them aside. I don't bother with it. What matters to me is my main account that I trade on a very frequent basis, which is E-Trade. And that's the account where I did this rebalance because I wanted to raise capital to buy more Tesla, more Google, more Amazon, more Microsoft when the time is right. Coming back to the time. So can we really time the market? That's a big question that I have been asked many times. We cannot. Nobody can time the top. Nobody can time the bottom. But we have seen in the recent example that when we were on the top. See, Elon Musk sold back in October, November. Palantir, bought gold. Remember that time when Palantir bought gold, and I actually did a video of that. And then Elon Musk sold at like 1100, and then few other guys got out in some of the stocks. That was the top. They saw what was coming. We, of course, retail investors are the last of the bunch that basically gets these signals. But we become more vigilant and we learn from what we saw. Again, I wouldn't have sold my Tesla even at 1100. I'm not selling a Tesla stock even at 500. That's my conviction on Tesla, and that's why I'm not selling any Google or Amazon. I'm actually buying more of these because I believe in these companies and I don't believe in selling the stock or basically taking the profit and then buying them again. That's just how I invest and how I trade. Then on the other hand, when the way the market condition is right now, I'm gonna play a clip for all of you guys. And this video is about SoFi, as you can see, right here. No, right here, right here. As you can see, this video is about SoFi. I'm gonna talk about SoFi in the video. And I will play a clip. I'm not gonna say who, because this clip was on CNBC. And I have recorded from CNBC's 2-minute clip. Watch it. Pay attention to the timeline. And then I will come back on SoFi and I will give you few things I'm noticing with this stock. So I wanted to kind of set the groundwork of why I'm playing this clip. So go ahead and take a listen.
Joining us now, Liz Young, SoFi's head of investment strategy. It's good to see you. I'd love to know what you would tell people you think happens now with the stock market that the Fed has spoken.
Yeah, look, first, Scott, I think the Fed did a good job today. I think Jerome Powell did a good job today, and there's a couple of reasons why. I think number one, obviously getting their projections to a much more realistic level was really important. They were way off base before, so that was a really important positive. The second thing is we learned that it wasn't just lip service, that they were data dependent. They changed their direction after that CPI report, and I think that was a big positive. So now we know that they are actually watching those things. And lastly, I think watching the consumer and noting that headline inflation is really what matters is a much more real-world approach to going after this, and it prevents them from making a huge mistake because they have their head buried in the sand. That all said, I do agree with Jeffrey that they're still a little bit too optimistic on their projections that they can do all of this without inducing a recession. Now, I don't think that increased recession risk is going to stop them, but I also don't think that profit margins and consumer spending can last much beyond this year if inflation doesn't get under control. So I still think that they have to hit it with a hammer, and I still think we see volatility through July.
Do you think by getting closer to where the market has been on rate expectations, which they did today, it'll calm markets, so to speak, particularly the bond market, which has been just going crazy over the last, there were moments in the last few days that were certainly jarring, if not wholly unsettling?
Sure. The smaller the gap between the actual events and what the market was expecting, the better for market volatility. But we've still only gotten just one more piece of data. There's a lot of uncertainty here. And I think the biggest one that's still looming out there is that second quarter GDP report. So that's why I'm still not telling people to plow all their money in and declare victory here. Because if we get a negative GDP print at the end of July, the market hasn't priced that in yet, right? A 22% decline in the S&P is not a recessionary decline. So if we get a negative GDP print, you're going to see the market go down another 10 to 15%. I don't want people to be exposed before if that happens. So yes, it does help volatility to be more in line, but I still don't think we have enough information to know what they're going to have to do for the rest of the year.
Yeah, July between GDP, more CPI reports, earnings. Oh, yeah, earnings are going to come out, too. There's a lot ahead of us. Liz, your points are well taken. Thank you. Liz Young, SoFi, joining us.
Okay, so after listening to this clip, now the confusion still remains. There's a big confusion in the market. I have bookmarked 5 articles, okay, on Bloomberg, and each article give a detailed explanation. One saying why this is not a bottom, one saying why this is a bottom, one saying why S&P is going to close down 5% from where it is right now for this year, and one saying why S&P can come down to 4,900. The confusion, the Fed, all of these, Wall Street, everybody got it wrong for this year. Okay, these people have the data, these analysts have the data, and still they got it wrong. So when they can't even figure out what's happening and what's coming in the market, we can only make predictions and guesses sitting here where we are right now with the limited information and limited data that we have. And I will actually show you some of the bookmarks that I did that I'm talking about where they're saying everybody got it wrong for this year. But before that, let me share this quick chart with you all. Okay, so what you see here, you can see, yes, this is SoFi's insider buying, and insider buying is one of the things that I pay attention to. So this is SoFi's insider buying right here, okay? You can see that SoFi has been really aggressive in buying the stocks. They have bought continuously. If you look, they really got more aggressive from June onwards. And these are not options grant. Everything that you see here on 6/1 is not options grant. These are all open market buys. That means they're also paying what you and I are paying in the stock market. So when these companies, when they come out, or these insiders, when they come out, and insider is only, like if you see over here, it's only Anthony Noto, and then this director right here, Harvey Schwartz, who came in and they both bought more. But it's mainly Anthony Noto who is coming out and keep buying more. Now I want to bring to this right here. This is SoFi's price target updated as early as 6:16, which is June 16th, just a few days ago. Mizuho Securities, it's a buy recommendation, and the price target is $9 for the next 12 months. Okay, next 12 months. Now, these price targets have changed a lot. If you look at the price target that came on 5/31 from Jefferies for $20 for the next 12 months, if you look at 9, you can see the difference between the two analysts. Okay, this is what they do. This is what their job is. They analyze companies. They look at their balance sheet. They look at their future product. They look at their future earnings. They are coming out and they are giving such huge range of price target. This is huge, right? $20 and $9 is a huge gap. But an average 12-month price target is $10.19 right here. And where the price was when I took the screenshot, the return potential is 86% on your money. In the next 12 months is what they're saying is the return potential. Can they all get it right? Can they all get it wrong? Nobody knows and nobody has a clue. Because these are all predictions. Nobody can factor in so many things. What SoFi person just said about the Fed hasn't really factored in a few things. Or sorry, the market hasn't factored in a few things. And I also feel that we are still away from the bottom of the market. But that doesn't matter. If the company is doing all the right things, this is the way to go about owning more shares of the same company. Buy more shares on a weakness or buy more shares on a regular basis if you have the money and the funds. If you have limited funds, then you need to play it smart and buy it on a weekday, because at the end of the day, it's how many shares can you accumulate in these market conditions is going to matter when we get out of it in the next 3 to 4 years. And 3 to 4 years means when this whole situation will change. I think we are going to be trading sideways for a very long time. And I'm not a financial advisor and I don't make these videos for you to follow blindly. So that's why I want to kind of make it very clear. But I'm going to do this for the channel because I received some comments which kind of made me feel that, I think this is needed for this channel the way we are right now and how many people watch us and how can it affect people. I have requested my financial advisor to come on the channel to talk about what the market condition is. He's not going to recommend buy or sell. Of course, I have a financial advisor. You all know I have a business and I have a 401k that I offer to my employees, and that firm manages the 401k. So I've actually reached out to them. I had a call with them on Friday, a detailed call about talking about the market conditions of where it is going and what to expect in the coming days. And I requested him, can you come on the channel to talk about what the market conditions are? Because of course I can speak what he told me, but I can't really, speak on his behalf because that's his words. So I would rather have him say on the channel directly. And he agreed. So we're going to set up a time where he's going to come in and he's going to quickly give a brief summary of what to expect in the market and the data that they are seeing in the market. Because I feel that it's very important for us investors to play the cards right at this time. Okay, these are monumental times for the stock market. This is the time that's going to make a lot of wealth for a lot of people. Top 1% lost $1.4 trillion in the stock market before the market even entered the bear market. So this week S&P entered bear market, but before that, top 1% lost $1.4 trillion. That's a lot of money to be lost in the stock market. But it's happened, it has already happened. And now, we are now trying to piece the puzzle together. Because if you think that Fed can give us the soft landing, you're dreaming. There is no soft landing happening here. And I've been saying that even in my previous videos, that Fed cannot give us soft landing. We are going to hit hard big time very soon. And that's why I feel that we haven't seen the bottom yet. We are going to see a capitulation a day or two, or maybe a week, when sell-off will be very, very intensive, very intensive. And we are going to see rallies as well. Rallies can last a week or 2 weeks or maybe longer. I actually watched a very interesting video and I want all of you guys to watch it. It's from Clear Value Tax. That's the name of the channel on YouTube. He is an accountant, I think he's a CPA, and he talks about money, investing, and market condition. He recently released a video, which I kind of follow, and I listen to his video. He has very good points about when the market is going to hit the bottom. Again, nobody knows, right? We all are basically putting the research together and saying it. I actually mentioned the fertilizer crisis in my previous video, not previous, I think 2 or 3 videos ago, where I said that fertilizers is going to be a problem because there's a lack of fertilizer, which is going to result in lack of crops, which is going to result in lack of food. That means the prices is going to go up. So the inflation that we are seeing right now is going to get worse. Clear value tax person is saying the same exact thing, but he's giving with the timelines. And it's a very interesting video. So definitely watch it. I will link it in the comment as well below. So this gives us an idea of what the market has not priced in yet, what the market has already priced in. And I think that in this time frame, from now till September, October, in between that, we are going to see some perfect buying opportunities for some perfect companies, which is going to be very important for our portfolio if your horizon is next 10 months or next 12 months. Like if you are in the market of continue buying it, and if your horizon is that, okay, next 10 to 12 months, the market is going to turn around, we are going to see the buying opportunity happen now, in the next 2 or 3 months. And then that money that you put in right now is a money that you're not going to use for the next, I would say, 10 years or next 5 years, because that money will take some time to maybe double or triple or whatever the goal is, and depending on what kind of companies you invest in. So we are in a very interesting phase of stock market, and we will continue in this phase for some time. We are going to be trading sideways. I even was talking to my financial advisor, and I was like, we are going to be trading for sideways. And he's like, yeah, I can see that. So hang in there. And of course, we are going to see some massive price movement in the coming days, and we are going to get that 1 or 2 or 3 maybe hard capitulation days, and that'll be the time when I will put my money back into the market. I am sitting on some cash, as I mentioned in my previous video, and my whole point of selling all my stock is that I wanted to raise more cash. So I hope I provided some value, and if you like the video, then definitely give it a like, and also let me know in the comments what are your feeling about the economy and where do you see the economy go from here. And if you have watched this video till now, then you're awesome. I have a link for Moomoo for free stock. Definitely take advantage of that. And then in the coming days, I will bring in more and more people on the channel to kind of talk about what the market condition is, because the more minds, more brains, the better it is. And for Discord and Patreon, if you like to chat with like-minded individuals, links are in the description below. Thank you so much for tuning in. Until next time, you all have a sparkling day.